What's up, traders and investors? Welcome back. Today we're going to be focusing on news. News, asking the question, is it useful or is it not? I always get the question, is there a good news source out there that I can get my information from when I'm making my investment and trading decisions? And there's a lot of places out there where we could get news: Wall Street Journal, Yahoo Finance, you name it, Bloomberg, CNBC, smaller publications, online publications. We get different types of news. We get economic news. We get news coming out of the Federal Open Market Committee, Fed announcements, economic reports, jobs reports, you name it. There is news coming at us 24/7. And it's very difficult to get the news from a reporter standpoint. Understand it's going to be very difficult from a reporter standpoint to get the news out to us in both a speedy manner and in both an accurate manner. And so one of the biggest things that you got to remember about the news is that the news reporter's job is not to get the news to us correctly. It's the main priority is to get it to us first. If you're the news reporter or the news organization that is breaking the story, then you're going to get a lot of advertising dollars coming into your news station or your newspapers. So it's very important that your reporters, if you're running a news show or a whole news organization, that your reporters get the news out quickly. And then if there's any mistakes in the news or any holes in that news, then go ahead and get the facts later on, and then you'll always hear this: stick around as the story unfolds. And that's the difficult part about the news, is that we get these news reports and we can't tell whether they're transparent or not. A really great video I stumbled upon years and years ago, is something called Cramer manipulation. Now, Jim Cramer is a very popular, very long-term announcer, commentator, has his own show on CNBC. He's been around. He's ran several hedge funds in the past. He's a well-respected individual on television. And when I run into people who watch him, sometimes they just say, well, he's very entertaining. I don't follow his advice. But there are millions and millions of people around the world who do follow his trade advice and his investment advice. And he talks about the company's fundamentals a lot. He talks about a company's products and services and their earnings. He'll interview a lot of CEOs and product developers, and people trust his advice and trust his commentary. The issue is he is proven to be one person on public television and then another person behind closed doors. And while I'm not going to play this for you with you guys right now, I would highly encourage you to go out and research this and just take a look at this particular video. You can go out to any search engine, go out to Google and type in Cramer with a C as his last name, Cramer manipulation, and you'll find out just the type of shenanigans that goes on behind the scenes in the financial arena, and how money managers, big institutions, banks, hedge funds, you name it, how they use the news and the media specifically to manipulate thoughts and to manipulate our perception, which when our perception leads to actions, this ultimately is going to end up hurting our overall result. So I'm a huge fan of listening to the news just so I kind of know what's going on in the world, and I can have a conversation about certain things with coworkers and colleagues and friends and family. I'm a big believer in doing that. But I am also a very big believer in that we should listen to none of it when it comes to our investing and trading decisions. Okay? For instance, earnings is a big one. Earnings comes out every quarter from every publicly traded company, right? They have to release their earnings and their balance sheet so we can see what's going on behind the doors. You'll get a balance sheet, a simple balance sheet that comes out from one company and another balance sheet that comes out from another company, and they all have to do this in order to show the shareholders and the world what's going on behind closed doors within their company over the last quarter. Now, what's interesting about earnings is that there's a phrase out there called cooking the books, right? And so it's not It's not a secret that some companies out there cook their own books, meaning they manipulate the numbers on their balance sheets to make shareholders feel better about holding on to or owning or wanting to own the stock. Sometimes these companies get caught doing it, and then there's fines and all this super fun stuff that goes along with that. But then sometimes companies don't get caught, and they just go on manipulating the books and manipulating the public into believing that that this is a good quality company to own, where maybe they're just hiding a bunch of stuff in the background in their balance sheet that we don't even know about. And by the time we do find out, if we find out that a company's been cooking the books, then we may get caught off guard, oftentimes get caught off guard, and lose a lot of money in the meantime. But the reality is there are plenty of companies out there who are cooking the books. The other side of that is there are plenty of companies out there who are not cooking the books. They are playing by the rules. They are telling the truth, and they are proud of that, and they work very, very hard to make sure they are very transparent with their shareholders. The problem is, if you've got two companies right here, okay, if you got two companies and their balance sheet staring you in the face, which one of them is telling you the truth? If one of them was cooking the books and one of them was not, great. How do you know which is which? And the answer is you don't know which is which. We cannot. It is impossible to know which companies are cooking the books and which companies are not. So I would not use any sort of corporate earnings announcement or a statement or a balance sheet to be able to make an objective trading decision. Let me give you a couple of recent examples here. A company called Tesla. We all know Tesla. We see the cars driving around every day. Tesla as a company does not make money. If you look down at the very bottom here on our charts, this is a screenshot that I just took. On our charts down here, you'll see that Tesla consistently quarter over quarter loses around $3.15 a share. Loses around $3.15 a share, normally speaking. Now, what you'll notice is on this last earnings statement, they actually lost $3.06 per share as a company. This came out on August 1st. Now, analysts were expecting, here's the earnings estimates, CEST were estimates. They were expecting Tesla to lose $2.73 per share, but instead they lost more than analysts expected. Well, this is worse than expected news, and you might expect that when you got worse than expected news that the stock price should go down. But it didn't. It actually jumped up something like 40 points. It jumped up like 40 points, continued to rally even after that, and then, collapsed back where it came from a couple of weeks later. So worse than expected news, head scratcher, prices jump. Around the same day, okay, shortly, just a couple weeks before, another company, Alcoa, earnings were estimated to come in at $1.36 per share. These are the earnings estimates. But they came in and they earned $1.52 a share. They actually made well above what they were estimated to make by Wall Street. And you would expect that the price would go up when they made more money than expected. However, the price went down, and it didn't just go down, it gapped down and continued to drop sharply all day long, continued to drop sharply the next day on good news, but not just good news, better than expected news. Okay, so we were expecting good news, we got better than expected news, and the price dropped. So what is the moral of the story here in this short news video? Here's some final thoughts. News is not transparent. It just simply isn't. It can't be, which is why the reaction to the news can oftentimes be the opposite of what you would expect to see. Number two, we can't know, notice I have the word know in quotations here, we can't know if what we're hearing is the truth, someone's version of the truth, or just a flat out lie. The reason we put so much weight on price charts is that the price charts cannot lie. Price cannot go up and down on news alone. Price goes up and down when buy and sell orders are placed inside the market, creating imbalances in people's willingness to buy, people's willingness to sell. These are the orders. Price charts cannot lie. And a big one here is news is often going to distract the investor from making objective decisions because our emotions get caught up in what we hear on the news, and then we end up making decisions based on what we emotionally feel, based on what we think is going to happen, not based on what's actually happening in the price charts. And news, this is the big one. After you watch the Kramer manipulation video, you'll understand this one much deeper and appreciate this. News can be used by the financial institutions to herd the masses. And do you think they're going to want to herd the masses to a place where it would benefit the masses, or a place where it would benefit the financial institutions? And if you guessed the second one, you were correct, right? The financial institutions do not necessarily want you making all the money. They want to make money for themselves. And when they want to buy, they have to convince some people to sell. And when they want to sell, they have to convince a lot of people to buy. It takes money. Number one, it takes a lot of money to manipulate the market price of something. Does that happen? Sure, it happens, but it takes a lot of money. It doesn't take any money at all to manipulate mass perception. It only takes news. And so, illegal or not illegal, is mass perception taking place at a media level? Is it happening? Are financial institutions manipulating retail investors around the world to buy at a time where they should be selling, to sell at a time where they should be buying, and overall hurting their financial situation, hurting their goals, and not leading to the life that they want to live? So make the decision for yourself. But these are just a couple final thoughts that we had on news. Hope you enjoyed this free trading video at TradersArmy.com. Reach out to us anytime if you have any questions. Take care. Bye-bye.